Welcome to JK Shah classes. We are going to start with accounting standard number 12, that is accounting for government grants. Now, when I talk with respect to accounting for government grant, that is nothing but a short revision which we will do with respect to this accounting standard, followed by some questions and answers on this accounting standard number 12. So quick revision of the things which we are going to study. AS 12, accounting for government grants. The points which we will discuss is the definition, types of grant, third, accounting treatment, fourth, refund, and the last area, that is disclosures. So we are going to study these 5 areas as far as accounting for government grant is concerned. Now let's start with the first area, that is what do you mean by government and what do you mean by grant. Now if I say what is grant, it is nothing but any kind of assistance whether in cash or kind received subject to fulfillment of conditions. Any kind of assistance whether in cash or kind received subject to fulfillment of condition, that is nothing but your grant. Then what do you mean by government? Of course, the accounting standard does not talk with respect to defining government. It gives us an inclusive definition. It says government includes central government, state government, or local authority. It also includes organizations of importance and repute, like the United Nations is that, World Bank, IMF. These are all organizations of some importance and repute. For all practical purposes, even private grants will be accounted as per AS 12. Yeah. So the first area, what is a grant? It's nothing but a kind of assistance, something assistance we have received subject to fulfillment of conditions. And government is central government, state government, or any local authority. Local authority means municipal corporation, or a Zilla Parishad, Taluka Panchayat, or even a Gram Panchayat. Now coming upon types of grant. What are the types of grant? I can classify this grant into 2 parts. Monetary grant and non-monetary grant. Under monetary grant, I can further have 4 bifurcations. That is, for purchase of a fixed asset as promoter's contribution, revenue grant, and for expense loss incurred in previous year. As far as non-monetary is concerned, I will say there are two parts for non-monetary grants. Number one, asset at concessional rate and asset at free of cost. So basically four things. What are the four things which I have here is, first, as far as monetary grant is concerned, I can receive a grant for purchasing a fixed asset. Government is giving me money to buy an asset. Like I want to install a solar rooftop. So to install a solar rooftop, government gives me money. I incur an expenditure of 3 lakhs. 1 lakh is received from the government. So that is nothing but for purchase of fixed asset. Now when we talk about as promoter's contribution. Now what do I mean by promoter's contribution? Don't think government becomes promoter. Government is not becoming promoter of my company. It does not buy my shares. But it promotes a project. It is an upfront payment for a particular project. That is nothing but promoter's contribution. Third, revenue grant is nothing but for meeting my day-to-day expenses. I am a college institution. So we have to pay salaries to our staff. So in that case, the staff salary, whatever is paid, the compensation is received from the government for our daily expenses, recurring expenses. I can say it's nothing but a revenue grant. For expense loss incurred in previous year. Means I had incurred some expenses once upon a time, maybe some previous year back, some expenditure is incurred and I'm receiving the government grant for that expenditure which was incurred in the previous years today in this year. That is nothing but for expense loss in previous year. As far as non-monetary grant is concerned, we can have two types of non-monetary grant. First, asset at concessional rate and asset at free of cost. Means an asset, say a laptop is available at 20,000. Government gives me that laptop at 15,000. This is the difference between monetary and non-monetary. In case of monetary, what happens? I pay 20. Government gives me back 5,000, which was that nothing but purchase of fixed asset. But here what happens? Asset at concessional rate, I pay 15,000 only. I'm buying that asset from the government. An asset at free of cost. I don't pay anything. I get an asset directly from the government. Asset at free of cost. So we have completed the second area. What is the second area? Types of grant. Now coming on to the third area, that is accounting treatment. How should it be accounted? So let's move to the third area. I will just put point so that I can discuss this. This is my first point. This is my second point. Third point. The fourth point, as far as journal entries, accounting treatment is concerned, I'll be discussing that part. Okay, coming on to the first point. What is our first point? The first point is nothing but for purchase of fixed asset. So I'll just write down journal entries for purchase of fixed asset. Here I can break it into two parts. Let me do it on the next page so that no referencing will be required. For purchase of fixed asset. That is your first point. The standard says that asset can be a depreciable fixed asset or a non-depreciable fixed asset. How is accounting to be done? I can give you two ways. The standard says if it is a depreciable fixed asset, I can have two ways. Either I go for a capital approach or I go for a revenue approach. If I go for a capital approach, then what will be my accounting? I'll say first when I purchase the asset, say machine. So my machine account debit, say 10 lakhs to bank, 10 lakhs. Second, government give me a grant, bank account debit to machine. Government gave me a grant of 3 lakhs. So it is reduced from the cost. So whenever I say capital approach, what does capital approach means? Reduce from cost. Will reduce it from cost. Yeah. Bank account debit to machine. Now if I depreciate, I will be depreciating 10 lakhs or 7 lakhs. But obvious 7 lakhs. Assuming the useful life is 10 years, my depreciation on straight line method would be depreciation account debit to machine, say 70,000, and ultimately is transferred to profit and loss. So profit and loss account debit to depreciation 70,000. What I am talking about is nothing but this only. For purchase of asset, depreciable fixed asset, capital approach, revenue approach. Yeah, so that is A part. If it is revenue approach, then what is my entry? If it is revenue approach, if it is revenue approach, my entry goes the same way. For purchasing, machinery account debit to bank, 10 lakhs. When I receive grant, I say bank account debit to deferred grant, 3 lakhs. The asset is not reduced. Deferred grant, it means the grant grows. It is credited to P&L over a period of time. For purchase of fixed asset, depreciable, non-depreciable. I have not yet spoken about non-depreciable, but I am just talking with respect to depreciable. Capital approach, revenue approach. Capital approach, revenue approach is this. Yeah. So the third entry, what will be the third entry? I'll go for depreciation. So what will be my depreciation? It will be nothing but depreciation account debit to machinery. Of course, now I'm going to debit depreciation in credit machinery with 1 lakh because the cost of my asset is 1 lakh. I'm sorry, cost of my asset is 10 lakhs. So depreciation, assuming the same useful life of 10 years, it goes in this way. The fourth, what will be the fourth area? I will transfer it to profit and loss account. At the end of the year, profit and loss account debit to depreciation, 1 lakh. What about the government grant? This government grant, that is nothing but deferred grant, will also be transferred to profit and loss account in the proportion of depreciation. In the proportion of depreciation, that is 30,000 will be transferred to profit and loss account. Not equal, in the proportion of depreciation it will be transferred. So this is what we are doing. If purchase of a fixed asset, depreciable fixed asset, non-depreciable fixed asset. Capital approach, revenue approach. If it is capital approach, we reduce it from the cost. If it is revenue approach, it is credited to profit and loss account over a period of time. Now, how did we arrive at deferred grant? So can I say deferred grant? How is deferred grant to be transferred? I'll just write down on the top because I had a place there. Deferred grant to be transferred to profit and loss account is nothing but amount of grant received into depreciation for current year divided by total depreciation. Depreciation for current year divided by total depreciation. This is what deferred grant will be transferred. Clear? Now let's link it. What we are learning? We are learning monetary grant. Under monetary grant, we are learning this, purchase of fixed asset. Under fixed asset, we have come on this part, which is nothing but for purchase depreciable, non-depreciable. Under depreciable, there are further two parts: capital approach, revenue approach. If I'm going with capital approach, these are the entries. If I'm going with revenue approach, these are my entries. Okay, now we are left out with non-depreciable asset. What is to be done for non-depreciable asset? I'll go and write it here. Again, a capital approach, and a revenue approach. If it is capital approach, further two bifurcations are available. The first is reduce from cost, and the second is nothing but show as capital reserve. And here revenue approach, that is nothing but deferred. Let's learn the entry for each of them. Reduce from cost. So can I say it is, first entry is lend account debit to bank, say 10 lakh. I purchase a lend of 10 lakhs. Government gives me 4 lakhs. So I'll say bank account debit to lend 4 lakhs. Things are over. Coming back, treat as capital reserve. Now don't talk about depreciation, it's a non-depreciable. Lend account debit to bank, say 10 lakhs, 10 lakhs. Government gives me grant. So I pass an entry, bank account debit to capital reserve, say 4 lakhs. Now if it is revenue approach, the second area, if it is revenue approach, then what should I do for revenue approach? I'll pass an entry, lend account debit to bank, say 10 lakhs. Bank account debit to deferred grant. You can also write down deferred government grant. Deferred grant 4 lakhs, and then deferred grant to P&L. Very important, how much amount is to be transferred? Not in the ratio of depreciation. This should be based on actual expenditure for that asset. Whatever is the actual expenditure incurred, you will transfer based on that actual expenditure and not based on the depreciation. Of course, depreciation is not there. Yeah, I'll again summarize. What I have done till now is nothing but I'm talking about purchase of fixed asset. Under purchase of fixed asset, I have two of them: depreciable, non-depreciable. Depreciable, two approach, capital and revenue, we completed. Non-depreciable, again two approach, capital and revenue. But under capital, we have further two bifurcations, which is reduce from cost and show it as capital reserve. So what we have completed is nothing but part one. Part one, purchase of fixed asset, is over. Yeah, you may just have a glance through it. Purchase of fixed asset, depreciable, non-depreciable, capital and revenue. Yeah, depreciable, non-depreciable, capital and revenue. Then we did non-depreciable. Again, capital and revenue. Yeah. Now let's move to the second area. What was our second area? The second area, was nothing but as promoters contribution. As promoters contribution. What you have to do if it is promoters contribution? Very simple. Government is not giving me money to purchase an asset, or it is not giving me money to take care of my day-to-day expenses. It is giving me money for a particular project. I have started some project and it is giving me a kind of a capital grant for a project. So my entry would be simple. Bank account debit to capital reserve. Don't write equity shares because government does not become the owner of your company. Your promoter is nothing but it is promoting a project, not the company. Yeah, bank account debit to capital reserve. Like I got some contribution of 150 CRs. Yeah, that is nothing but my promoter's contribution. As revenue grant, and fourth also for expense loss incurred in previous year. Now what I will do, I will pass a single journal entry because in both the cases my profit and loss account will be credited. You can write double entry, bank account debit to grant received and grant received account debit to P&L. Ultimately my entry for both the cases is nothing but bank account debit to profit and loss account by whatsoever amount you may say, 20,000 rupees. So it is one and the same, whether it is revenue grant or grant is received for expense or loss which are incurred in the previous year, my journal entry will be the same, bank account debit to profit and loss account. I am writing profit and loss just to give you an overall idea. Being a revision lecture, you can have two-tier journal entries. The first year, bank account debit to government grant received. Second entry, government grant received account debit to profit and loss account. So this is where we have completed our 4 areas of monetary grant. Let's come down. These 4 areas. For purchase of fixed asset is completed. Promoter's contribution, revenue grant, and for expense and loss incurred in previous year is over. Now coming on to non-monetary grants. Now as far as non-monetary grants are concerned, we have asset at concessional rate and asset at free of cost. Please look here, asset at concessional rate and asset at free of cost. So how should this be recognized? Asset at concessional rate and asset at free of cost. So how should the accounting be done for this? Very simple. The standard says recognize at the amount paid. What do I mean by recognize at the amount paid? Means the market price of the asset is say 30 lakhs. The government sold me the asset. Government sells us at 20 lakhs. So we will recognize the asset at 30 lakhs or 20 lakhs? Of course at 20 lakhs. So my entry would be the asset which I have purchased, asset account debit to bank 20 lakhs. The value at which I pay. But if it is free of cost, the market price is 30 lakhs, government is giving me free of cost, leakage of SH. Then what is to be done for that? If asset is at free of cost, then the standard says recognize at nominal value. Recognize at nominal value. Now that nominal value may be rupees 1 or 100, 1000, 5000 or even the cost of the asset. So I can recognize that asset at nominal value, asset account debit to, don't say bank, you are not giving money, to capital reserve. Asset account debit to capital reserve. The amount whichever you like, maybe rupees 1, 500 or you can say 30 lakhs as the case may, but this is nominal value. And if I say something is nominal value, very much important, no depreciation will be charged if the asset is recognized at nominal value. Yeah, no depreciation. You may write whatever nominal value you want. So as far as non-monetary grant is concerned, it can be concessional or free of cost. It is concessional, the value what you pay, the price what you pay. If it is free, then no need to write any amount which you deem fit. Write a nominal value which is either 1 rupees, 1000 rupees, 10,000 as the case may be. Okay. So coming back, what we were discussing accounting treatment for government grants. Accounting treatment for government grants. What is to be done? So monetary grant, there were 4 areas. Non-monetary grant, there were 2 areas. Those 4 areas, again, fixed asset, promoter's contribution, revenue grant, and for expense loss incurred in previous year. Fixed asset, again 2 parts, depreciable, non-depreciable. Depreciable, again 2 parts, capital approach, revenue approach. Non-depreciable, again 2 parts, capital approach, revenue approach. Under capital approach, further 2 parts, reduce from cost and treat as capital reserve. Now coming on to the last area, refund. I will write down the refund entries here itself, because what is refund? Due to non-fulfillment of conditions, it may happen that I would not like, but I have to compulsory refund back. I have to give back the amount of grant received to the government. That is nothing but refund of grant. So this is refund. How should it be accounted for? So our accounting for refund totally depends on what accounting did we do when we received the grant. So the first area, if you remember, we had 4 areas, 1, 2, 3, 4 for monetary grant, 5 and 6, that was nothing but non-monetary grant. So I'll just discuss these 4 areas, because how should refund be accounted for a non-monetary grant? The standard is totally silent. The standard does not put out any kind of procedures or treatment for refund of non-monetary grant. So even it would be advisable, nothing is to be mentioned as far as non-monetary grant refund is concerned. I will only stick to these 4 areas, how to take care of these 4 areas. So it all depends. Purchase of fixed asset, promoter's contribution, revenue, and for expense loss incurred in previous year. So let's move on. How this refund will be taken care of. It all depends on what is the earlier entry. Now look here. For purchase of fixed asset, I reduce it from cost. Now if it is refund, now let's assume after 3 years there is a refund. Now if it is after 3 years there is a refund, it means the WDV at beginning of 4th year, can I say 70,000 would have been reduced for 3 years. That is 2,10,000 have been reduced from 7 lakh, 2,10,000 would have been reduced. It is nothing but 4,90,000 is my WDV. In this case, I am talking about this case. So WDV is 4,90,000. I hope everybody would have got this 4,90,000. First it was 10 lakhs. 10 lakhs, usme se 3 lakhs was reduced for receiving the grant. So it is 7 lakh. And 7 lakh, from that 7 lakh, what I have done is nothing but I have reduced 2,10,000. How did I get 2,10,000? It was nothing but depreciation for 3 years. 70, 70, 70, assuming it to be straight line. Now what is to be done? Government says give us back our money. We'll say, okay, take your money. So I have to pass an entry. I have to reverse of the entry which I have passed for receiving the grant. I will say it is nothing but machine account debit to bank 3 lakhs. Machine account debit to bank 3 lakhs. Machine account debit to bank 3 lakhs. Now, can I say my revised book value? What will be my revised book value? It will be nothing but 490 plus 3 lakhs. That is 7,90,000. My revised book value will be 7,90,000, and I'll be charging depreciation based on the revised book value, that is depreciation account debit to machine. It will be nothing but 7,90,000 divided by 7. Now how did I get 7,90,000? It was nothing but 4,90,000. 4,90,000 plus 3 lakhs, that is nothing but 7,90,000. This 7,90,000 I will divide it by remaining useful life. Remaining useful life, that is what AS10 says. AS10 says whenever there is a change in the cost of the asset, it should always be applied prospectively. So 7,90,000 divided by 7, I get somewhere around 112,857. That is 1,12,857 will be the amount of revised depreciation. One more entry, you can just add it. Now your entry would be for transferring it back to profit and loss account. Please have a glance of it. What is happening here? For purchase of fixed asset, now if it is revenue approach, then can I say after 3 years the WDV of the asset will be how much? So from 10 lakhs, every year 1 lakh, 1 lakh, 1 lakh has been transferred. So WDV will be 7 lakhs. If I refund the grant, I need not touch the asset account, because when I received the grant, the asset account was not impacted. When I received the grant, it was only bank account debit to deferred grant. So can I say my entry will be deferred grant debit, P&L debit to bank. Why deferred grant debit? It goes away from me. But now it will not be 3 lakhs, it will be 2 lakh 10,000. Now the question arises, sir, how did you arrive at 2 lakh 10,000? The reason is simple. My deferred grant was, what was my deferred grant amount? My deferred grant was 3 lakhs. Don't you think every year I am transferring 30,000? Every year if I am transferring 30,000, what does it mean? First year, second year, third year, 90,000 rupees has been transferred. Now if 90,000 rupees has been transferred, can I say the balance left in deferred grant account is 2 lakh 10,000? 1 zero is also there. The balance is 2 lakh 10,000. So I will debit my deferred grant account with the balance available, that is 2 lakh 10,000. Remaining goes to my P&L 90,000 and to bank 3 lakhs. The last entry, of course, for depreciation, it will be same. Depreciation to machinery. Don't say 1 lakh 12,857. It will be 1 lakh, because there is no change in the cost of the asset. There is no change in the cost of the asset. So can I say whenever there is refund of grant, there will be impact on depreciation if it has been reduced from the cost of the asset. But if the grant has been credited to deferred government grant account, there is no change in the amount of depreciation. Proceeding further, non-depreciable asset. If there is a refund of a non-depreciable asset, how would a refund of a non-depreciable asset work out? Very simple. Here, refund would be lend to bank, 4 lakhs. Here, capital reserve to bank, 4 lakhs. And here it will change. Deferred grant, I'm just putting a shortcut, DG, account debit. Profit and loss, account debit to bank. Of course, 4 lakh. Now here you are not in a position to tell me what will be the amount. You're not in a position to say what will be the amount. The reason is simple. It all depends on how much amount has been transferred to P&L till date. See, here we had a hashtag based on actual expenditure. So if the actual expenditure is 3 lakhs, deferred government grant will have balance of only 1 lakh. So here I'll say balance in DG account. And here of course it's a balancing figure. P&L will be nothing but the balancing figure. So this is what all about non-depreciable asset. Coming on to promoter's contribution. I think now you know the answer. I just have to reverse it off. If there is a refund, can I say it is nothing but capital reserve account debit to bank with the amount which I have already given. As far as this is concerned, again reverse off. Whatever is the amount of grant. Yeah, I'll just take everything on. We were basically on these 4 things. Refund, we were talking about refund, purchase of fixed asset, promoter's contribution, revenue grant, and for expense loss, purchase of fixed asset. You may just go through it. This is what it is. The black lines, or the say what I have written with black is with respect to receipt of grant. Whatever I have written with the red way, it is nothing but for refund. This was for non-depreciable asset. Then this was for promoter's contribution, and for expense, loss and revenue grant we have same. Now as far as this is concerned, there is a big question mark. The standard does not specify any procedures with respect to what is to be done, hence let's ignore it and just move to the last area, that is nothing but our disclosures. What is to be disclosed? What is to be disclosed? So from where did I get this? If you remember, these are the 5 points which I was supposed to disclose with you. Definition, types of grant, accounting treatment, refund and disclosures. So as far as disclosure is concerned, the first, accounting policies followed for government grants. Second, government grant refunded. These are the things which we will disclose. One more thing I can say is nothing but the scope, a small area where this standard does not apply. So this standard does not apply for recognizing any kind of government's contribution in the equity. If any kind of government's contribution comes in an equity, government is funding, like government gives money to Air India. So this is government funding. Government gives money in banking sector, all those public sector banks are there. That is not covered by AS 12. Till now, we have completed the revision of the accounting standard 12, that is government grants. We talked about the definition, the types of grant, monetary, non-monetary, what is the accounting treatment for receipt of grant, and the last area which was very major, refund, how this refund is to be accounted for. Now let's do some of the problems which are very important for us. Accounting for government grants. Supriya received a grant for 2500 lakhs during the accounting year 10-11 from government for welfare activities to be carried on by the company for its employees. The grant prescribed a condition for utilization. However, during 10-11-12, it was found that the conditions of grant were not complied with and the grant had to be refunded to the government in full. So what is the accounting treatment? Of course, this is nothing but a revenue grant, and generally in case of revenue grant, we would have created profit and loss account and we wouldn't have deferred it unless until there are circumstances to defer a revenue grant. We don't defer a revenue grant. Circumstances like matching would be there. So here we wouldn't have deferred the revenue grant. So what is to be done on refund? Can I say on refund the whole amount would be debited back to profit and loss account, because when you received the grant, जब grant मिला था, you would have passed an entry bank account debit to government grant account and government grant account debit to P&L, or I can say bank account debit to P&L. Now what is happening? It is getting refunded. So I'll pass an entry profit and loss account debit to bank. So this is the solution here. Yeah, answer 41 will be debited to your profit and loss, charged, you're debited to profit and loss account. And of course it's an extraordinary item. This you will learn when we do AS 5. Coming on to the second area. A Limited purchased machinery for 40 lakhs. Useful life is 4 years and residual value is 8 lakhs. Government grant received is 16 lakhs. Show the journal entry to be passed at the time of refund of grant in the third year and the value of fixed asset. Now, the refund of grant in the third year and value of fixed asset. So first of all, can I say if we have reduced it from the cost of fixed asset, that is nothing but our capital approach, or revenue approach, that is nothing but we have created it to deferred government grant account. How would this work out? Can I say, you can just write it down and then you can just look at the solution there. The cost of fixed asset. What is the cost of fixed asset? Of course, the cost of fixed asset is 40 lakhs. The government grant received. What is the government grant received? Can I say the government grant received is nothing but 16 lakhs. So government grant received 16 lakhs. So we left with 24 lakhs. This 24 lakhs is to be, this is nothing but the revised cost to be carried forward in the balance sheet. Now what would be the amount of depreciation to be charged every year? Of course 24 lakhs minus, there is a residual value. The question says residual value of 8 lakhs. So residual value 24 minus 8 lakhs divided by 4. Now how did I get this 4? It is nothing but clearly given in the question. It is given in the question that 4 year is the useful life. So what would be our solution? Coming back, 24 lakhs minus 8 lakhs divided by 4. So every year I need to depreciate 4 lakhs. Every year I will be depreciating 4 lakhs. So if 24 lakhs is there, can I say end of year 1? It will be 20 lakhs. End of year 2, it will be 16 lakhs. And so on. I'll just go till end of year 2 because the question is clearly mentioning grant is getting refunded in third year. That is nothing but beginning of third year. That's an assumption for me. So end of year 2 it is nothing but 16 lakhs. Who is 16 lakhs? WDV is 16 lakhs. Yeah, WDV is 16 lakhs. Now what is happening? Refund is happening. If refund is happening, can I say whatever accounting treatment I did for receipt of grant, I have to reverse it off. I had reduced it. What I will do? I will add it back. So add grant refunded 16. So what is left out? 32. So 32 lakhs is my revised carrying cost. From that I reduce 8 lakhs divided by balance useful life. What is the balance useful life? It is 2 years. So 32 minus 8 divided by 2. The amount of depreciation to be charged every year will be 12 lakhs. This is what has been given in the solution. This is nothing but fixed asset account debit to bank, 16 lakhs. That is the entry to be passed on refund. The balance in fixed asset after 2 years depreciation 16 lakhs. After refund of grant will be 16 plus 16, that is 32 lakhs, on which depreciation for remaining 2 years, that is 12 lakhs per annum. This is what I did here. Yeah, 12 lakhs. Now the question doesn't end. It says if you have credited it to deferred grant account, means DGG. If it is deferred government grant account, it means every year what is going to happen? Let's work out that also. What would have happened? Second area. Can I say then the asset would be 40 lakhs, the government grant would be 16 lakhs. The depreciation which I would have charged would be nothing but 40 minus 8 divided by 4. That is 32 divided by 4. I would have got somewhere around 8 lakhs depreciation. This 8 lakhs depreciation, I charge it for 2 years. So after 2 years, the depreciation would have been charged would be 16 lakhs and my WDV of the asset would have been 40 minus 16. My WDV would have been 24 lakhs. I'm on this. As far as this 16 is concerned, this 16 will be amortized over a period of 4 years. So divided by 4. Not 4 years I can say, but in the ratio of depreciation. Now the ratio of depreciation just being SLM method, it is 1:1:1. Hence I am dividing directly by 4. But for exam, remember, it is nothing but in the ratio of depreciation. That is amount of depreciation for current year divided by total depreciation. So every year 4 lakhs will be transferred. So at the third year, can I say the amount of deferred government grant which is left is 8 lakhs. Now there is a refund. How much refund I have to do? Of course 16 lakhs. If I refund 16 lakhs, my DGG account is having a balance of 8 lakhs. So 8 lakhs will be debited from DGG. My entry will be DGG or deferred government grant account debit 8 lakhs. Profit and loss account debit 8 lakhs to bank 16 lakhs. And as far as this asset is concerned, no impact will be there on the asset. 24 lakhs will be depreciated in remaining 2 years. That is 24 minus 8 divided by 2. The answer remains same. The amount of depreciation is 8 lakhs. I'll speak up again. It is 24. So depreciation will be the same. 24 minus 8 divided by remaining 2. 24 minus 8 divided by 2. Your depreciation has no change. This is what we discussed earlier also. So this is your solution. Deferred grant 8 Profit and loss 8. How did we get? Because deferred grant, look here, the balance left out was third year, the balance is 8 lakhs. Yeah. Deferred government grant account, the fixed asset will continue to be shown at book 24 lakhs. I hope you remember, and depreciation will continue at charge at 8 lakhs. Let's move to next question. Santosh Limited has received a grant of 8 crores from government for setting up a factory in backward area. Out of the grant, the company distributed 2 crores, okay, as dividend. Also, Santosh received a land free of cost from state government, but it is not recorded in the books as no money has been spent. In light of AS12, examine whether the treatment for both the grant is correct or not. Of course, no, the treatment is not correct. You have received 8 crores for setting up some factory somewhere in the nature of promoter's contribution, you can say. If not clearly mentioned, we can say it's for promoter's contribution, and no dividend can be paid out because this is not profit, it is capital receipts. Capital receipts are not available for distribution of dividend. So the first thing is wrong. The second, they have received a government grant for land, in sense they have received land free of cost. Okay, you may have received free of cost, you have not given any money. As per AS12, you need to recognize it at nominal value. So this is what our answer is. Accounting for government grant is received for specific purpose, it should be utilized for the same. So the grant received for setting up factory is not available for distribution of dividend. In the second case, even though company has not spent for land, the same should be recognized in the books at nominal value. And if you remember, if any asset is recognized at nominal value, no depreciation is to be charged. Of course, here the land was only there, but no depreciation is to be charged. Okay. To the last question. Messrs A Limited has set up a business in a designated backward area with an investment of 200 lakhs. The company is eligible for 25% subsidy and has received 50 lakhs from the government. Explain the treatment of capital subsidy received from government in the books of the company. So we are setting up a business in a backward area and you are going to receive 200 lakhs into some 25%. So can I say it's nothing but grant in the nature of promoter's contribution to be credited to capital reserve account, and this capital reserve, you may just go through this solution, is not available for distribution of dividends.